Alberto Casellas, who is known as Beto, I hope I can call you that,
Absolutely.
is the CEO of Synchrony Health and Wellness, which is part of Synchrony. And I thought maybe we should just start out by you saying what Synchrony is and what Synchrony Health and Wellness is.
Sure. Synchrony is a leading consumer finance business in the U.S. We provide to millions of customers in the United States ways for them to finance a variety of different products and services. In health and wellness, we have a business, a platform focused on healthcare. And we create financing products to help patients and consumers to really finance the out-of-pocket expense that exists out there in many of the medical procedures that they care. So we bring forth financing for them to be able to take care of their health and be able to take care of what they need to do to be able to continue to pay for those expenses.
And you even have a creative new pets thing, right?
Yeah, we have a couple of different things in the veterinarian market. We've had a long relationship with veterinarians and pets over the years, and we've been able to kind of shift over the period of time during the COVID to bring forth many of our tools and technology to the curbside and being able to provide that to pet parents as the waiting room inside the veterinarians have completely shifted over the time of COVID. We've been able to bring those things outside.
So we may not get back to the pets too much, but so we are in a very strange time for American healthcare. I think no one here has any doubt about that. So just describe how you see the American healthcare landscape right now from this business standpoint and from the consumer standpoint.
Yeah, I mean, it's a large market. It's $4 trillion. There is a large out-of-pocket expense that consumers are now responsible for taking care of their health. And that's about $400 billion. And what we see out there, there is a large piece that there is a debt out there that is uncollectible. It's about $140 billion. And so it strains the consumer in terms of being able to do that. And what we see is that financing is not a brickless product out there to being able to provide consumers the choice to be able to afford the care that they need when they need it. And so we think there is an opportunity for bringing third-party financing in terms of the whole dynamic of consumers and patients having a greater responsibility for paying for those services.
So there really are a lot of things that people cannot do because they simply can't afford it at the moment.
Yeah, certainly there are opportunities for sure in terms of being able to say yes to a procedure. And that's what we do. We bring forth to those medical providers, doctors' offices, health systems, the opportunity to give choice to those consumers to say, hey, I have to take care of this knee surgery. I know it's going to have a bill of $800 in the end. I got to be able to find a way to fit that in my budget. And therefore, I have to be able to consider that purchase the same way that I consider buying other products and services that I have. And usually the answer to those in many cases is being able to finance that particular procedure.
Okay, we'll specifically talk about how you do help them do that. I want to get back to this uncollectible $140 billion at some point, because that's an amazing statistic. But what specifically do you make possible for those people?
Yeah, we partner with over 250,000 locations in the United States. We have over 11 million customers that basically use our product to be able to get the care that they need when they need it. And so we provide a flexibility of payment options at the doctor's office and being able to provide that particular consumer the opportunity to pay that particular bill over time. We also provide a service to these small businesses. We have over 250,000 of them around. And basically what they need is being able to collect that amount because it's not going to be paid by the third-party payers or the insurance companies. So it's an easy way for them to be able to partner with us, a company like us, in being able to facilitate that particular settlement, get their money in 2 days, cash flow positive, and not be burdened by the fact of collecting bills or uncollectible debt. So we take care of that responsibility for them, and they can take care of the patient and the diagnosed.
So you partner with the doctors, the veterinarians, the other kinds of service providers who are doing medical and related procedures, who are themselves small businesses who don't have the capacity to extend credit themselves, and they don't want to lose the opportunity to serve those patients. And you allow them to offer the patient a way to pay. But it isn't only just putting it on credit. Sometimes they can actually be interest-free for a certain period, right?
Yeah, we have different options in terms of being able to pay for that. We have installment loans in parts of our business where we're able to do it on equal payments across the board. We're also being able to give the opportunity for the customer to put it on defer interest, what we call defer interest, in being able to pay it over time. And if they pay that particular amount by the time that we give them, whether it's 18 months or 24 months or 6 months, they basically forgone any interest charges around that, and we defer those, and they actually pay just the amount that is actually billed by that particular doctor.
Is there a lot of evidence that people are really able to do things that they would not otherwise have been able to do?
Yeah, one of the amazing things is when we speak to our customers, they tell us over 43% of them have told us that after they learn about Care Credit and Synchrony, they're actually able to say yes to that particular procedure. And they will tell us that they would have forgone or postponed the procedure that they actually would have been diagnosed for or to be able to do. And so it's a big deal for these customers to be able to have the facility, being able to have the capacity, to being able to have an option for taking care of that particular procedure by having the conversation around, how am I going to pay for this?
So this is especially available and necessary for people who are lower income, who, you know, we've heard a lot about them on the stage today, who are suffering disproportionately from environmental change, and a lot of other problems that they face because of just general inequality, but they can essentially get things they would otherwise be denied through these services?
Yeah, I mean, we provide financing for many Americans that need to have their budgeting piece and being able to fit that in their weekly budget or bi-weekly budget or monthly budget. And so being able to pay over time in a way that is connected to the doctor as well is one way that we bring forth that conversation a lot earlier in the process, rather than waiting for a surprise bill at the end when they don't know what actually could occur. So being able to have those conversations early in the process, at pre-care, understanding that you may have a $400 or $600 bill in the end, and then asking the questions, how am I going to pay for this? Gives the consumer a much more peace of mind, as well as the optionality of saying yes, rather than forgone the treatment or postpone the treatment for another 6 or 12 months.
So this really dovetails with another big issue in American healthcare, which is transparency, and especially transparency around pricing. You know, so much of the problem for many people has been they get procedures done and then they get these huge bills afterwards. They didn't even know, sometimes for experts, they didn't even know we're in the room.
Yeah.
If they're getting surgery or whatever. So in order for your system to work, they have to really know what something costs up front.
Yeah, I think that's part of the conversation that is occurring. It's a new trend in the industry to have those conversations at pre-care. And I think part of it is the consumerism of healthcare is becoming more of a bigger trend. Part of that is the fact that we have now high deductible healthcare plans. Over 50% of employers have high deductible healthcare plans for their employees. And what that means is you have a deductible that you have to pay early in the year. Once you hit that deductible, then you start getting some payments from the insurance company, usually 60, 70, or 80% of that particular bill paid by the insurance. But you need to hit the deductible. So it creates sort of a dynamic in January, or what we call the January reset, where people actually have to pay the first dollar of that particular bill full at $1. And until they hit the deductible, then they're able to get some additional help from the co-insurance in terms of those payments. And so that creates a greater need for that consumer to understand early on. And providers are beginning to be a lot more explicit and a lot more early on at pre-care of checking your insurance, being able not to have the surprise bill, being upfront about it, and then also bringing the conversation around their choices like Care Credit and Synchrony that can provide this flexibility of payment for you to be able to get the care that you need at that particular time, and being able to provide that flexibility of payment across the board.
So your business is especially busy in the first few months of the year, I would assume.
It goes throughout the whole year because you never know when you're going to have a medical, situation that you have to take care of. So it's very much across the board. Yes, there are some consumers that need the help because of the high deductible plan at the beginning of the year, but it goes throughout the whole year because some of the procedures actually have an out-of-pocket expense and they need help to be able to finance that bill.
Right. So from the standpoint of the small businesses who are the dentists, which is a big category,
Yeah.
I know, or plastic surgeons, or any of the many types of doctors that you serve. Talk about, from their perspective, what the benefits are. You mentioned a little bit of it before, but historically, they've had to either take a risk on a patient or extend credit themselves or do something that they're not really prepared to do structurally or from a business point of view.
Yeah, we've been pioneering patient financing for over 30 years. And what we have seen and learned from our doctors, our business owners, whether it's a dentist, whether it's a plastic surgeon, whether it's a veterinarian or an audiologist, is the fact that using us, it provides them a greater capacity for them to say yes to more patients. It relieves them from the burden of having collections or uncollectible debt out there, and gives us responsibilities for individuals like us that are able to help them from that standpoint. It also the fact that they can actually spend more time in terms of caring for the patient rather than being burdened by some of the administrative stuff that occurs. And so third-party financing companies that are doing this, one of the things that we're doing very well is integrating into their flow, into their DNA, so that it becomes natural for them to be able to offer the option of financing $800 of a particular procedure into 12-month payments. And so giving that conversation up front helps that consumer and patient be able to be upfront. And at the same time, it helps the doctor kind of have a peace of mind that he knows he or she is going to know that they're going to get the money in 2 days from us. And we take the burden
Well,
of
they always
collecting
get the
that.
money in 2 days.
Yes. Yep.
So how problematic was it for them in the past if they didn't have this ability? I mean,
yeah, they will have to run their own receivable, and they have to have personnel in there. They'll have to have administrative people that they have to be able to do that. Perhaps they needed to do some line of credits that are perhaps sometimes expensive in terms of doing that. And just the burden of collecting in 30, 60, 120 days, 180 days, and having really the pressure of not knowing if that consumer is actually going to pay back or not. And so that's what we do.
Talk about how this affects the way healthcare is marketed. I mean, you presumably go to market to some extent with the doctors and other service providers now. And maybe how is technology changing that? Talk about that landscape.
Yeah, I mean, technology has brought forth greater opportunities for consumers to learn about us. And so we have invested in tools and technology that provides the consumers a more access to learn about Care Credit, to learn about Synchrony, to understand how payments are done, what is it going to cost. And then we also have helped the provider being able to do it in an easier way. So we have created tools like QR codes where people can learn about these type of products like Care Credit at the comfort on their own device, in the comfort of their own home, or sitting perhaps right there at the doctor's office and learning about the options that they could do. That's an example where that has worked out extremely well. Being able to have a provider locator. We have over 250,000 doctors that are and provider locations that are inside our website where people learn about Care Credit, they're part of the network, and then they actually learn about being able to, okay, I had some particular procedure done in the dental office, but now I can actually learn about other things that I may need. Or maybe they need some LASIK surgery, right, or maybe they need some knee surgery. They can go into that locator and find out about other doctors that are able to do this. And then they have the peace of mind that they know that they have capacity to pay because they already have used a product like Care Credit to be able to do that. So that's incredible ways for businesses like providers to bring forth consumers and patients to their offices by the power of being part of a network like Care Credit.
Do you think technology is going to change this business considerably more going forward? And what would you anticipate down the road technologically?
Anytime you have a large, $400 billion out-of-pocket expense in a very fragmented industry, there are certainly opportunities to do it better. We think that bringing forth integration projects into the payment ecosystem, being able to speak with customers around how to pay, and being able to integrate that into particular systems that are inside health systems, inside of hospitals, and inside of providers' offices, bring forth the opportunity for consumers and patients take care of their health and being able to say yes more than no. And so from that standpoint, we think that integration is really important. It's not part of what it's out there, and it's not completely 100% out there, but it's beginning to see. We see many of the health systems coming to us and saying, hey, we understand what you have done in certain markets, in dental, in audiology, in vision, in cosmetics. We would like to understand how we can do this at a hospital. And so over the last couple of years, we've been able to sign over a dozen hospital systems to begin to have the conversation about patient financing in areas where planned medical procedures are done at a hospital.
Right. So yeah, it also includes things that are more elective, like cosmetic surgery. You mentioned LASIK surgery, which obviously is not necessarily elective. I mean, you either wear glasses or you don't. But so a lot of that kind of thing is being, you serve a lot of cosmetic surgeons, among others, right?
Yeah, we do connectivity with the American Society of Plastic Surgeons, where 10,000 plus plastic surgeons are part of. And we work with them to be able to provide a set of products and services that meets the kind of the demands of that particular industry. We have worked with many other associations across the multiple industries that we serve, or the segments in the healthcare industry that we serve, to be able to do that.
Now, let's go back to this 140 billion of that's debt that consumers have incurred in the U.S. medical system that they simply aren't paying or can't pay? What does that figure represent?
That figure
exactly?
represents a number of uncollectible debt that is reported as uncollectible debt. There's other debt that is not reported as uncollectible debt that perhaps customers or patients might not be able to pay. And so those are simple bills that go out and the customer or the patient is not able to do so. So bringing forth third-party financing companies like Synchrony, like Care Credit, and being able to give the choice to the consumer to make an assessment around, okay, I'm not able to do an $800 bill right now, but I'm able to do an $80 payment over 10 months or over 12 months. I'm willing to do that and be able to say yes to that particular because I can fit that into my budget.
Yeah.
So bringing that conversation up, we think will help the whole dynamic of having debt can actually be paid and being able to loan to people that can actually have the capacity to pay, because they understand that from the get-go.
So talk a little bit about the history of Synchrony, the parent company. It started as financing GE appliances, is that correct?
Yeah, it started over close to 90 years ago, the Depression, in terms of being able to help small businesses bring forth small appliances to America, to the household. And we've grown from that to being able to provide private label credit cards and dual cards and co-branded card to many retailers in the United States. We have expanded to that to many verticals in household, in jewelry, in auto and home. And then we have a business in health and wellness where we have over 35 years, we've been able to provide healthcare financing to over 250,000 locations in healthcare. So we certainly have a business that see a lot of over 80 million Americans or customers are with us.
The Synchrony, all its different
Synchrony overall. And 11 million of those actually have a Care Credit card.
Interestingly, my grandfather ran a GE appliance store in Tulsa, Oklahoma during the Depression. So, and then
I'm sure
he moved to Kansas City, Kansas, and did it there also. It was tough business, but I'm sure you guys helped back in the day. So I know you have a lot of growth initiatives at the health and wellness part of Synchrony. Just quickly, what are some of the things you're thinking of doing to grow?
Yeah, I mean, we think there is a lot of opportunity in terms of expanding the markets where we are currently in. There is opportunity in terms of being able to grow that piece and bring forth patient financing at the beginning of conversations of many of the verticals and medical professions that are out there. We also think there is an opportunity to provide different types of products too, in being able to fit kind of the consumer need to what the actually the provider or doctors is. And then we're expanding on health systems and hospitals. It's an area that we haven't in the past. We very much have focused on the industries that I have mentioned, but we think there is a need, and we have talked to many of the hospitals and obviously have been able to do some contracts with them over the past couple of years in terms of bringing forth the opportunity to bring patient financing into their locations.
Well, great. Thank you so much, Beto. Really good to have you up here. And
thank you very much, David. Appreciate it very much.
Thank you.
Thanks.